Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. We are seeing mixed markets around the world this morning as China PMI disappoints, setting our futures lower, but Europe largely shaking off the news. Scott, do you think we can as well?
It would be nice, because I feel like yesterday the market was coiled enough. You saw the Russell at highs, you saw some stocks perking up. It felt like the S&P was finally going to break above the range. And then what happened? China comes out with a softer PMI, and we haven't been expecting any big things out of China as it's been a weaker area. And there are even some out there that think because of the smog problem that they're finally paying some attention to that they could have shut down some factories, and that helped hinder some of the production and hence weaker than expected PMI. So overall, just to take a quick look at the FXI, you will see, it's been in a downtrend. It's been in a range, hasn't done much in such a long time. Look at this series of lower highs. Then here, it finally looked like it was perking up. This is why I said it could be hard to trade the FXI if you want a macro plan maybe every month for the next year. I think that works out for you. But overall, for mentality purposes of the stock market, it tried to hold this low here of 35.50. Let's hope that this holds here. Some people might be trapped as it closed strong and it looked as if we were going to be ready to go. That happens in trading. So I'd say 35.50 or 35-ish is the level to hold for the FXI.
And of course, we are in the midst of earnings season, and in big earnings headlines after the close on Wednesday, we had Netflix and eBay both report and both rally on better than expected earnings. So how are we set up for these today?
Well, with those being strong, I also thought that potentially the S&P will, break out. So before I go to those names, let me just show you the S&P. The S&P itself, look at this upper range, which has been holding in, and look where it closed right there. It closed right at the upper end. And if someone wants to talk about the thesis of this trading, it's been frustrating because every time it's looked like it was going to break out, it doesn't. Every time it looked like it was going to break down, it doesn't. So with that being said, anyway, here it is. 1832 is your intermediate line. That's the 21-day. As long as it stays above that today, I think everything is okay, and I'd love it to go from red to green. If we start trading below this, then all of a sudden people are going to be talking about a retest of 1815. But then, like you said, Brittany, look at the action in Netflix. Okay, first of all, last quarter, that was the big gap up failure. So some think that could happen again. I wouldn't just think that because it happened last time, it could happen again. Usually things don't happen twice. So the way I would do it is this. Let's see how much of the gap we hold. 383 is the pivot high here. This pivot is 389. So if it opens up and in the first 30 minutes can't trade below both of these pivots, then maybe, it's going to extend through 400. If they try and bring it in first, because they might, big move, then look for a 30-minute pivot to then bounce off of it. Then you buy versus that, and then if it breaks out, get out of the way, because people who kept buying this whole way down here got crushed. A lot of people actually made money short on that day. But anyway, with that being said, let's see how much of the gap is free and open, because what we like, Brittany, about gaps is it gives us a point of reference. And through earnings season, you have a lot of gaps. And then what you do is you watch to see, can the stock hold above that gap for a period of time? Then that's your point of reference to trade versus. And then sometimes they extend and they turn into really good trades.
Right. What about eBay? Because eBay did rally after hours on robust earnings as well.
eBay is an interesting story because they came in line earnings. They were a little soft with their outlook, but they have PayPal and now activists because it hasn't been doing anything. Like Carl's back in there, like you said. And to me, I want to see if the gap actually holds. It was a lot higher last night. I know I came out the day before saying I'm going to buy some eBay calls. I think I bought the 54s, and when it was trading at 59.60, I was actually on the road. People like, red dog, what do I do? I'm like, if you think it's going to fade, you short this stock after hours, and then this way you could use your calls, to cover that short. So this way you're locking in 4 or 5 points or 3 or 4 points, whatever it is. Anyway, if you did that, you book some profits. There's still some room there now, but if you're coming in flat and you want to see is there opportunity, look at the size of this channel. You look at the overall channel here. eBay has not done anything for such a long time, rightly so. There hasn't been much growth there. So with that being said, what level holds? I think it's right now at 56-ish. It was as high as 60 yesterday. So I would say if the bulls want to keep this somewhat interesting, at least hold 56, have a gap there, and then we'll see if a few sessions of support come in there, and then maybe it breaks out of this range, and there'll be enough talk. If it happens to go negative and comes in, I think you're going to see a lot of the same frustration that you've seen in eBay for the past year or so.
Well, we have plenty of earnings still to come. Later today, we'll have two reports that will be telling for the smartphone market: Samsung and Microsoft. What will you be watching here?
Well, Microsoft comes out after the closing. I might take some calls into it because I do think they had a good holiday season. I saw a lot of people with the Surface tablet. When I was over in Kiev, thank goodness I'm not there now, or in Eastern Europe, saw a lot of Nokia phones, a lot of Windows 8. So with that being said, I know they don't have their CEO yet, and I do think once that gets out of the way, maybe it acts better. So, with options expiring tomorrow, instead of just taking the stock into it, if you want some exposure to Microsoft, do some calls or a call spread. So you look at the chart here, I'd rather see you buy, go to the long side versus short side and risk is premium paid. Maybe buy the 37s. You buy the 37s. If it's a really good report, this thing could see 39, and then you make some money. I do think at some point this gets better this year. So if you think it starts this quarter, maybe buy some weeklies or go out a month or 2 or 3 months and buy the 39s. As far as Samsung, I think it's tomorrow. And I don't think, people are like, oh, let's watch Samsung and then that'll give us some clues on Apple. But I don't think that's necessarily the case. If you come to us, Samsung, I think they've been head to head, but I feel like a lot of people now, Samsung's like cool and has the actors and this and that. I feel like with the Apple commercials and, the professionalism that Apple's trying to, display, it's like they're like the professional, iPad, iPhone.
Samsung is bigger overseas, though. We have to keep that in mind.
It is, and now that we're okay with, China mobile deal, maybe we'll get help there. But either way, I think for Apple, the way to trade Apple is, a day or so ago, I bought some calls just to be involved. I think the stock was 545-ish. Pre-Icon's tweets yesterday that he's been accumulating it, which I think is pretty important. It didn't have a lot of follow-through yesterday, so at this point it's still above the trend line. It's wedging again, consolidating, a big move we've seen since the summer. If you want to play this stock, after hours trading and when it has a report, if it starts getting above this 560 and holds it, I think it's good. And then obviously above 575 is even better. If, I don't take stock into earnings, I take options. If you want to buy options, maybe some people do a call spread. Buy the 560s, sell the 580s, something like that. Or if you think it's going to be even more than that, just buy the 560s. Take less of them if you don't want to risk as much, and this way you're not capping yourself if it's one of those really good reports where it doesn't look back.
So will you be watching Samsung's report then for any clues about what we might hear from Apple?
A little bit. If it's soft, I'm not going to, make it seem as if, Monday now Apple's soft, I don't want to play it anymore.
Right.
I think that they've kind of, diverged a little bit from each other recently, but we'll see.
All right. Well, let's get into some solar stocks here. We're going to turn the spotlight on these. Let's start with Trina Solar, which has been holding higher above its 8-day EMA. What are you watching here?
Well, with these, I'm just going to talk about levels and breakouts.
Okay.
And TSL, it's not quite the leader, but there's a pattern there. You look at TSL, you'll see, it has been going sideways. It's above the 821. Decent relative strength yesterday. It might be down a little bit today. Something to see if it can go from red to green. If it starts trading above this, 1675, your next big trend line break is around 17. I think this is a nice setup.
Oh, what about Yingli? Because this one has been holding above the 8-day EMA as well.
This one doesn't look quite as ready, but it's still in the game. It's consolidating. If you look at the chart here on YGE, you'll see it's trying to wedge here. You do have resistance coming in. This really, you could buy a little bit in the pattern, but I wouldn't do too much. I'd wait for it to resolve. It really has to start getting above 732, 735 in order to get very interesting.
JK Solar building a base above its 21-day. Where could we see this one pick up some more momentum?
Well, here you go. Let's go right back to the chart. And then you see here, it's a nice upper level area. Just reclaim the 8-day. It's above the 21-day, going sideways. This really has to start getting above 37 and a quarter for it to do another squeeze and breakout type trade. Just breakout trades are not happening as frequent as we would like. So just make sure there's volume attached when it comes to these solar names, because they tend to be tricky.
And I would imagine same kind of case with Solar City. We're not really expecting an imminent breakout here, right? Because it has been holding on to recent gains and holding above the 8-day, but it doesn't look like it's going to pick up crazy momentum soon.
Well, usually you'd like to see a leader like Solar City break out and then some of the second tier names go, but this already broke out and it's consolidating. So if this were, like you said, to break out again, you know, it'll drag a lot of those up because people will be like, oh, if Solar City's going, what's next? You know, if you look here at Solar City, you will see, you know, it did have a nice breakout. You know, I know a lot of people were playing it, and then it got downgraded, I think, on this day, and it's still hanging in there, letting the 8-day catch up. If we were to start getting above 77-ish, I do think maybe people will get excited again. And the last name I just want to look at, which I wasn't ready to go over, is, you know, First Solar. First Solar is getting very tight. Okay, it's trading in, you know, this triangle type formation with a descending trend line here. If this were finally able to get above 54-ish with some type of authority, I do think that that would help the group, and that'll be good for a trade because that'll be on my radar.
All right, well, coming up, we're going to go in the trenches with the bios, which has been a hot area. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back at going in the trenches with the bios, which has been a hot area as of late. And, you know, the individual names here can be kind of tricky to trade as there's a lot of they're heavily driven by a lot of data. But so if you want to play the group, then let's take a look at the IBB.
Yeah, and we talked about this, I think, when it broke out, and that's been an exciting area. You look at the IBBs, you know, you didn't even really have to be in the names. You look at this breakout here, look how clean that was. Then ever since then, what did it do? Oh my goodness, what a quinky dink. It followed the 8-day all the way up. And now I would say it is a bit extended, but I wouldn't necessarily try and short this index because there are so many different stocks showing a lot of power here.
Right, like Biogen, which was actually Mark Sperling's trade idea of the week. And this one did get a breakout on Tuesday and then follow through yesterday.
Yes, this one was a good focus by him and by the VTF. You look at the chart, here you go. You know, he loved this tight pattern right here, rightly so, right against a prior congestion point. Broke out, little follow through yesterday. It's a little extended, so really there's no clear-cut pattern here, but you could stay with it if you want to own it, unless it, unless it violates, just say this 306.
How about Celgene? Could we expect a breakout here?
See, this one's actually on the radar because it's tight. You have an area to trade against. If volume comes in and I see it go off on one of my alerts, here's, I think, a potential trade. You look at Celgene, you look at the chart. Very tight pattern here. I remember when they came out with news that day, it reversed. That got a lot of people out of it, but it started poking up again. You know, this chart to me is very tight, and if it starts to get above 170-ish, 171, you know, you could see finally a clean move in the Celgene.
What about Regeneron, which has been consolidating above its 8-day EMA?
This too, you saw a really nice big move, and now it's flagging. You like to see flag patterns because that means you can get continuation and points of reference. And you go to REGN, here was your nice breakout move on volume. Now it's going sideways. So if this were to get back above 300, I think it could go back on its way to 320.
And Amgen, we know that one had a potent breakout at about 120. That was a decent gain of about 4%. What now?
What now? You want to see maybe it's red today with the futures. Maybe it goes red to green. You get follow through. Yesterday was clean. You look at strong stocks that closed really strong the prior day. If the futures are lower, I don't think Amgen's worried about China. So with that being said, you know, it can go from red to green, and yesterday's high is 124.46. And hopefully if you play this breakout, you're feeling really good. Same thing, you know, goes to show. Look at this GILD. Beautiful breakout right here. You know, you don't want to ever trade up there, but doesn't mean it's over. You know, and you know this group is really on the move. So I'd keep Celgene on the radar.
Celgene, all right, that's the pick right there. How about let's do some quick hits and talk go-go. Perking up a little bit, reclaim the 8 and 21 day. Are you expecting some continuation here?
Perhaps. I know the CEO was on Fast Money last night, and I think there was some chatter. I can't say the word, it's not chatter, but talk, you know, about the way he looked. People didn't like the way he looked on Fast Money, so it traded down a little bit. Anyway, with that being said, let's look at the chart. You have a descending channel here. perked up yesterday. I would say as long as it stays above this 24-ish, I think it acts okay. Let it go sideways a little bit, then perhaps it continues. I think there's a big business out there for go-go. Let's hope people get past the CEO's appearance.
How about over in the semis? Himax Technologies listed off the charts on Tuesday, had a potent breakout, closed the day up 7%. What do you think now?
I think yesterday, the last 2 days were the day to focus on it. Now you want to see it digest. So if you look at the chart here, really nice call. I know a lot of us made some nice money in it. Here was your breakout. If it consolidates or stay above 1450, I think there could be another move above 1533.
How about Twitter holding above the 8-day EMA for the past 3 sessions? What do you think?
This one's tough. This one looked like it was going to go yesterday, and then it just failed. And Twitter, Facebook, they've been a little complicated lately. I guess they're waiting for earnings. So with Twitter, you look here, it did give us a nice trade right around here, and it is holding higher. So with that being said, it's holding above the 8-day now, going sideways. I am in some, and if it starts getting above 64 on some volume, I might add to it for it to finally break this area. I'm not sure if it wants to run before earnings or if it just wants to sit here. We shall see. Overall, though, it's been a really nice trade since becoming public.
And with bank earnings largely out of the way, let's check in on your favorite bank for the drawer, Bank of America.
Yes, and I said yesterday, I'm like, if you have Bank of America in the drawer, great. If you were looking for an entry, yesterday was the first day that I kind of got back involved. I didn't sink my teeth into it, but had a back more than a tier 1 for me again. So with that being said, here was your gap up after earnings. 4 days working off that overbought condition ever since the breakout above 1580. Yesterday it did turn up. It's probably down a little bit with the future. So, with that being said, I would stay with it. And if you want to stop, I would use this. This is what, 1687. And if you want to be even tighter, use 17. But ultimately, I have a feeling it goes from negative to positive and might even push through 1715 today.
Well, lots to watch as earnings continue to roll in. What will you be focusing on today?
Well, I come in with like 7, 8 positions. I don't know exactly or more. And I just want to see if we can go from red to green. If we can go from red to green, it'll be really good. It'll be a nice trading day because a lot of people go after the strong stocks from yesterday, today. If we open up down 7 handles and don't rally and close down 12, it'll be a complicated day for me, perhaps. And hopefully it's not the same for everyone out there. And we have a lot of earnings coming up and, getting into the heat of it. As you can see, there's a lot of movement. A lot of people had short on the brain with Netflix, so hopefully, when you go into a report, you maybe buy puts versus being short, because if you were short Netflix into the report, you might be blown out of the water. Same way, if you're looking for a long idea and you want to take it into earnings, I would say go with a call or a call spread because, you don't want to blow yourself out of the water. Yes, you risk, you pay a little bit more for premium to hold the option versus stock, but at least you're involved and you're involved with the plan because during earnings season, we say risk is premium.
Paid. There you go.
There you go.
That's your morning call for this Thursday. Happy trading. Have a great day.